Are you guys paying attention to the absolute building boom that's going on across America right now? If not, you should be, because that building boom is going to have dramatic implications on the U.S. housing market over the next 12 to 24 months. Quite simply, home builders and apartment developers are the most bullish they have been in decades. And when developers are bullish, you know what that means. Lots of new construction, lots of new inventory hitting the market. And when we look at real-time data from the U.S. Census Bureau on housing permits and housing starts, we're seeing exactly that. Record surges in the amount of new homes and apartments permitted under construction. Why is this relevant for you? Well, if you're a prospective home buyer who's deciding whether now is the right time to buy, or you're a prospective seller who's deciding whether now is the right time to sell, you need to understand what the inventory situation is going to look like in your market over the next 12 months. That's going to dramatically impact what home prices are going to do. And my prediction is that this surge in inventory is going to cause a housing crash, because all these new homes and apartments that are being permitted, well, they haven't hit the market yet. They're going to hit the market over the next 12 months or so, and they're going to hit the market just as demand for homes and apartments is going down. So what I'm going to do in this video is explain to you what the data is saying on this topic. We're going to look at real-time data from the U.S. Census Bureau on these numbers, and we're also going to zoom in state by state and understand what's happening in your backyard. Is your state going to see a housing glut over the next 12 months? I'm going to tell you in this video. Without further ado, let's get into the data. So I want to start things off by impressing upon you guys just how massive the surge in new prospective home and apartment development is in America in recent months. And you can see that on this graph, which is looking at the year-over-year percentage increase in housing permits pulled by developers across the country. And this is a data set that's tracked by the U.S. Census Bureau, comes out each month in real time. And what we can see here is that in May 2021, there's been an 18% increase in the amount of permits pulled year over year. So to be clear about what this means that the amount of permits pulled in May 2021 is 18% higher than it was in May 2020. So what that implies is that home builders and apartment developers think that there's going to be an 18% increase in the aggregate demand for homes and apartments in the U.S. across the next 12 months. And we can see that this level of increase is historically high. Typically, the year-over-year increase in home permitting and apartment permitting is, let's just say, anywhere from 3 to 6%. Typically, you may actually see in 2019, the amount of permitting went negative. It actually went down year over year, but it's typically in that 3 to 4% increase range. And that's because that's kind of a sensible estimate for how much demand is going to increase. But we're seeing that that sensible estimate is now going off the charts. The problem is that when you look at actually like the demand fundamentals, the things that suggest demand for homes and apartments, things like jobs, the job count in the U.S. is actually 6 million lower than it was pre-COVID. So jobs in the U.S. are lower. The levels of migration in the U.S. are lower. 600,000 people died during COVID, right? All the fundamentals are saying there's not necessarily like, even 3 or 4% more demand structurally for homes, let alone 18%. But I'm going to get more into that later, comparing the permitting to the jobs and the demand. What I want to actually start with is zooming in on a state-by-state level. Because let me tell you guys, there is massive differences across the country in how many new homes and apartments are being built. And you need to understand these differences so you can get a sense of what's going on in your backyard. If you're a buyer or you're a seller, you need to know how many homes and apartments are coming online in your area. And that's what we're looking at on this map. We're looking at the increase in housing permits pulled by state over the last year. And to be clear, we're looking at two different time periods here. We're comparing the amount of permits pulled from May 2020 to May 2021, and we're subtracting that from the amount of permits pulled from May 2019 to May 2020. And let's start with an example. You guys probably noticed it jumps off the page here. Texas in dark red. Texas pulled, or developers in Texas pulled 206,000 permits for housing units May 2019 to May 2020. That increased to 245,000 permits from May 2020 to 2021, an increase of 40,000. So what this is saying is that home builders and apartment developers in Texas are forecasting an increase in demand of 40,000 for new homes and apartments going forward. And you can see no other state is even close to Texas. Second place is Florida at plus 25,000. And then there's some states kind of in this third tier like Georgia, South Carolina, North Carolina, Tennessee, Colorado, Arizona in that third tier around like a 12 to 15,000 increase in permitting. And guys, these are massive, massive numbers. But what astute observers, I'm sure, will say is that the nominal numbers aren't the only thing that matters, right? We also need to understand, percentage increase, because these states are all different sizes, right? And they were building different amounts of homes to begin with. So on a relative basis, that's almost more important to understand the percentage increase in permitting. And that's what we're looking at on this map, and you can tell it looks very different from the previous one. Texas, where it was by far number one in raw permit increase, and on a percentage basis, it's only a 19% increase from what they were doing before. If we go to someplace like Arizona, well, Arizona actually permits are up by 32% year over year, which is a massive increase. If we go to a place like South Dakota, they're up by 65% year over year, and a place like Pennsylvania is up by 43%. So we can see that while certain states dominate kind of the aggregate increase in permits, the nominal increase in permits, on a relative basis, pretty much everywhere in America is building a lot more than they used to over the last year. If you guys are enjoying the data presented in this video, just make sure to hit that like button. When you do that, it gets me more exposure on YouTube, and when I get more exposure, it allows me to put more time into doing these videos. So hit that like button. That would really mean a lot to me. Additionally, make sure to comment on the video. I love hearing your feedback. I want to hear your experiences in the market. If you're a home buyer, seller, or renter right now, what are you seeing? When you guys comment, it makes these videos better. All right, let's get back to it. And I think that's got to cause some concern, because we know certainly that not all areas in America are growing much over the last year. And in fact, due to the massive job losses due to COVID, due to a lot of the deaths due to COVID, due to like the decline in legal immigration, a massive decline in legal immigration during COVID, that like fundamentally the demand for homes and apartments isn't increasing that much. But yet the permitting of new homes and apartments and the construction of new homes and apartments is increasing a lot. So we're in a situation where a lot of parts of the country are going to end up in a big housing glut. Lots of homes and apartments delivered onto the market and not much substantial demand to absorb those units. And to understand this, we need to actually look at some specific examples. Let's look at some specific states and how they've changed over time in permitting growth and compare it to something like job growth. So on this graph, we're looking at the year-over-year permit increase in Arizona. So this graph looks very similar to the one we started the video off on, but when we started, we were looking at the U.S. as a whole. Now we're looking at just Arizona, and we could see that Arizona's had a 32% increase in permitting. We could see they went from 48,000 over the previous 12 months to 64,000 over the last 12 months. That's a 32% increase. Absolutely massive amount of increase in permitting. Again, I want to be clear. This means that builders and developers think that the fundamental demand for homes and apartments in Arizona is going to increase by 32% going forward. That's what this means. And historically in Arizona, it was not even close to that level. It was like 3%, 5%, 11%, kind of stayed in that, let's just say 5 to 10% range in 2017, 2018, 2019. It actually went down to like 1% and 2% in 2019. But then starting in early 2020, big surge in the amount of permitting. And so what I think would be an interesting thing is to compare this surge in permitting to the demand for real estate in Arizona. And a good proxy for demand is job growth. How does this permitting increase compare to the job growth in Arizona? And we can see that on this graph. I added the yellow line, which is the increase in jobs year over year in Arizona. And just a technical note, it's actually the 15-month increase in jobs, because we have to go back 15 months to kind of get before COVID really skewing the numbers. So it's 15-month increase in jobs. And we can see actually that Arizona's job count is 2.8% lower now than it was 15 months ago prior to COVID. So Arizona's jobs are down. And it's really this gap between the blue and yellow lines that's concerning me. Because what this gap is saying is that there's a disconnect between what builders and developers are thinking and doing and what the real economy is doing. And in the long run, job growth is one of the most important prognosticators for real estate demand and home price increases. It doesn't get really any better than job growth as far as a metric that predicts those things. And what this gap is saying is that job growth is not even close to justifying the increase in permitting that's occurred in Arizona. Now let's take a look at Pennsylvania. Pennsylvania, as we talked about earlier, has seen a 43% increase in permitting. So the number of permits went from 23,000 in the previous 12 months to 33,000 in the last 12 months. That's a 43% increase. So builders and developers in Pennsylvania are saying to themselves, we see a 43% increase in the aggregate demand for real estate going forward. However, we can see historically that builders and developers in Pennsylvania were never this bullish before. Going back to like 2017 through 2020, they were basically flat No real growth or decline in permitting occurring over the intermediate term, and then this massive increase in permitting occurring just over the last 6 to 9 months. So how does Pennsylvania compare in this permitting versus job growth dynamic? Once again, it looks very concerning. When we add the yellow line, which is the 15-month job growth, we can see that Pennsylvania is down nearly 7% in jobs compared to pre-COVID, and yet developers and builders are permitting 43% more homes and apartments. And if we look historically, we can see that these yellow and blue lines were fairly close together, right? Builders and developers in Pittsburgh had a good handle on developing for what the real fundamentals in the economy were doing, but in the last 6 to 9 months, they've gone off the reservation. And are really clearly not looking at the economic fundamentals anymore. And actually, never before in U.S. history has this occurred, where builders and developers have been so bullish at a time when the real economy has been so weak. And if you go back into the data, there have been times like where builders have built more maybe than they should have, but never has there been a time where job growth has been clearly in recession territory, big recession territory, but then there's a surge in home and apartment building. And this can kind of seem confusing, right? Why is this occurring? And I think there's really 2 key motivating factors here for developers right now. The first is the massive home price growth America has experienced over the last 12 months, right? 15% year-over-year home price growth, according to Case-Shiller. And that means that especially home builders are trying to profit off that while they can. They're saying to themselves, let's churn out the homes and sell them while demand is hot. At the same time, interest rates are near all-time lows. And when interest rates are near all-time lows, that means it's much easier to get financing and cheap debt to fund the building of these projects. So it's kind of a perfect storm where there's this short-term spike in demand and that the financing and debt is cheap. So builders and apartment developers are taking advantage of it, even when the fundamentals of the local economy suggest that they maybe shouldn't. And there's a big disconnect here, I think, for some of you. If we're saying jobs are down by 7% in Pennsylvania, why is the housing market still going up? Why is the apartment market still going up? Why is rent still going up when the real economy is bad? And this comes down to government intervention. Foreclosure and eviction moratorium, extended unemployment assistance, stimulus checks. All of these things are basically hiding the realities of the real economy and the fact that the U.S. is down 6 million jobs from its pre-COVID levels. That's being completely hidden from the real estate market by all this government intervention. And the fact that people can't get foreclosed on and evicted, that's propping up occupancies, both on the homeowner and apartment side. And that's propping up appreciation and rent growth. However, once these moratoriums roll off, which they will in just 2 weeks, we're going to see a lot of these realities start to take hold. The fundamentals in these real estate markets are kind of going to regress to what the economic situation and the job situation is showing. And that's what home builders and apartment developers are missing right now. They're simply just looking at the headline home price growth, the headline rent growth, and just saying, let's go full steam ahead, especially when we have cheap debt. But they're not understanding that there is a massive cliff that they're going to be driving off of in the next 6 to 12 months when the weak U.S. economy becomes a real reality for the housing market. And all of a sudden, there's a flood of evictions, there's a flood of foreclosures, home prices start going down. And just when that's happening, we're delivering even more and more new homes and apartments. That's not all, folks. There's another artificial factor here which is skewing the market, and that has to do with the disconnect between home and apartment permitting and starts and completions. And I think a lot of you are probably keyed into this already, but it's the fact that a lot of home builders and apartment developers hit the pause button on their projects over the last 6 months because materials costs just got unbelievable. Lumber went up by 400 or 500% from November to April or so to May. And because of that, a lot of builders and developers said, I'm not going to build right now. I'm going to wait for these materials prices to come down. And they have come down, but in the process, there's been a massive backlog of projects that are permitted but not yet started. And this backlog is another artificial thing that's robbing the housing market of inventory and pushing up prices and rents further. And you can see what I'm talking about here, where we're looking at a statistic tracked by the U.S. Census Bureau that's the cumulative amount of housing units that are permitted but not yet started. So this is kind of that situation I just described, where the builder pulls the permit but doesn't start construction for whatever reason. And we can see that that's up to a record actually of over 240,000 housing units permitted but not yet started for construction in May 2021. And you can see that this surge basically started right around the fall of 2020, right around when lumber prices started to get really high. All of a sudden this backlog occurred. And it's this backlog which is just robbing the housing market of inventory that it needs right now. And I think the good thing here is that these backlog units are going to come to market pretty soon. Like, lumber has crashed. I've noticed that in my community in Austin, the builders who put their projects on pause are like building actively right now, and I think this number is going to come down. But what I think is even more interesting is the last time that this number of permitted but not started units spiked, and we can see, when did that happen? Around 2005, 2006, at the peak of the last housing bubble, is the last time this happened, where we had all of these stalled projects that were permitted and not being constructed. And that's a very interesting insight, because it suggests that there's just something natural in the cycle about this occurring, where there's all of a sudden like this big demand from builders to build, and for whether it's materials or labor, they can't quite put it together, and there's a backlog. But this was actually a leading indicator last time around of the housing crash. And so, guys, that backlog is going to get released onto the market really, really soon. Like I said, I can already see it happening where I live here in Austin. And when you look at the price of lumber, it's shocking how much it's fallen, at least on the futures market, over the last month. The price per 1,000 board feet of lumber about a month and a half ago was $1,600 per 1,000 board feet. Now it's down to $575. It has literally gone down by 60% in the last month, and that's already starting to show up in the price of lumbers on store shelves. So you can bet this backlog is going to get unleashed just as more and more units are being permitted. And I'm predicting over the next 6 to 12 months, we're going to have a deluge of new apartments and homes being delivered for you and I to rent in or to live in. And this deluge is going to occur just as all the backlog listers and sellers who own their existing homes, who didn't list during COVID for a variety of reasons, come to market. And this is a perfect storm of sorts, guys. We're going to have an inventory deluge like the housing market has never seen in a short span of time. It's already starting to happen in certain markets, and it's going to really kick into high gear over the next 6 months. So my prediction is, yes, the housing market is going to crash over the next 6 to 12 months, and this increase in surge in building is going to be one of the contributing factors. If you guys want to learn more, I would suggest studying this data. The U.S. Census Bureau comes out with it every single month. I'm going to have a link in the description so you can track this data for yourself by your state as well as by your city. The census comes out with this data by the city as well. So you're going to want to see if there's a surge in building in your market, and if there is, you're going to be more cautious if you're a buyer and potentially more apt to sell if you're an existing owner. All right, guys, I hope you enjoyed this video. As always, make sure to give it a like. If you already gave it a like, don't undo your previous one, but give it a like if you haven't already. And make sure to leave a comment. I want to hear what you are seeing in the housing market. If you're a buyer or renter, when you guys comment and tell me your stories, it makes these videos better. I truly enjoy interacting with you guys in the comment section, so make sure to do that. All right, until next time, this is Nick from ReVenture Consulting signing off.